Alright guys, quick earnings update here, coming to you with Qualcomm Incorporated, ticker symbol QCOM, listed here on the NASDAQ. I mentioned in my previous video, in my opinion, I would personally consider calls on Qualcomm. They actually came out and missed on revenue after, of course, I spoke about how consistent they were. And then the company beats on the EPS side by almost around 5%. But of course, we want to talk about AI and all the future forecast and the future demand. As you see, optimistic Q3 forecast, rises after earnings show traction with on-device AI. That's probably right now one of the great fallbacks in the tech sector, right? It's because you can come up short on the profitability side or you're a little light on the revenue side, but as long as you just mention you're making advances with AI, the stock pops. But overall, we know Qualcomm is a decent company in the space, and obviously, again, slightly light on the revenue side, but at least now they're back up to above that $9 billion mark after we looked earlier of them dipping down to the 8.5s and the 8.4s. So, in my opinion, Qualcomm probably going to be good long term, but yeah, this one I mentioned calls, stock currently seeing about 5%. Next play was MGM Resorts, and I actually mentioned calls on this one, even though we saw some lightness, if you will, come in with some other gaming stocks we looked at, like Boyd Gaming, BYD, and Caesar Entertainment, CZR. And right now we can see MGM actually comes in above expectations here. Big China rebound, apparently. The Chinese segment over there did very, very well. As you see, MGM China achieved record quarterly results with adjusted property EBITDA up 78% year over year and resumed its dividend. So MGM came in. Let me see some numbers though. Let's get some numbers for you guys. Okay, profit. Where's my revenue? Rose to 4.38 billion, beating the 4.24 billion expected by analysts. MGM China. Yeah, beautiful. So MGM was another one I mentioned calls on. We're not seeing a big pop, but the stock reacting positively right now, up about 1.6% after hours. Next stock was Allstate, and I said in my opinion I would do calls on Allstate as well. I'm going to go in order of calls and puts, but Allstate ended up coming in with a really, really nice quarter here. And, this hasn't updated yet, but 393 on the EPS side were the estimates, and revenue estimates of about 12.75 billion. And the company comes in, as you see, adjusted EPS posted 513. The book value was, let me get it for you guys because I just relayed it into Discord. So yeah, as of last quarter, the book value on all was $60.19. Now book value revised at 62.27. So not a huge bump, but about 3% and change quarter over quarter. And when we're talking about like these slow, steady climbers, again, we looked at this one briefly, but even if you back it up, I mean, just look at this growth here. This is straight appreciation on your principal over all these years. Plus, of course, you're getting paid a dividend the entire time as well to own it. So holding something like this longer term and dripping it, in my opinion, is a phenomenal strategy. But Allstate Q1 revenue 15.3 billion. Estimates were again a little under 12, and interestingly enough, we saw the opposite reaction with another insurance company we looked at that I personally said calls, and they ended up missing revenue by about 1.6 billion in change. So interestingly enough, we may have literally before our eyes seen a market shift right there, of the market share, a shift in the market share from MetLife we were looking at. Now apparently over at Allstate having a good quarter right now. Stock basically flat after hours. But again, something like an Allstate, I know it may not necessarily be a trader stock, and I know a lot of people may have saw that they were on the earnings calendar, but maybe it's not one you play because there's not much of a move potentially after hours, and I can appreciate that. But again, we have to look at earnings at a bunch of different companies, across all of these diverse sectors to try to get a more clearer picture too about how every company is doing, right? We can't just focus on the Nvidias and the Teslas of the world and just say, oh, tech is raging, it's all about AI, the economy's great, don't worry about anything. In my opinion, that's just closing your mind off a little bit more. eBay, I said, in my opinion, calls, and the company comes out, they beat on the EPS side here, above estimates of $1.20. They post $1.25, beating by almost 4%. The revenue comes slightly above estimates by about 22 million, about 0.9%. So in the numbers here, good quarter for eBay. I did say calls, so that is currently incorrect right now. Stock down about 4%. And of course, they lowered guidance moving forward. Let's see what we have. Revenue, eBay maintain its quarterly dividend. Revenue rose. Yep. Oh, wait. Non-GAAP EPS 110 and 115 on revenue of 249 to 254. Expect EPS of 114. Okay, so technically the average EPS here expected at the top of this new EPS range, so that could potentially be viewed as the red flag. On revenue of 2.56 billion, the company forecasting 249 to 254. So mid-range would be, again, we're talking tens of millions below what analysts were originally expecting. So eBay right now dropping down after hours on that slightly weaker forecast moving forward, down about 4%. eBay calls incorrectly called, and we move on to MetLife. And MetLife, again, you can see right now, again, there's another reason why I like these stocks as well, because if we're talking about long-term investments and, like we always say, dealing with the short-term volatility for the long-term growth, but, when we're talking about like a larger, more stable equity out there, like an insurance company, like an Allstate or a MetLife, again, what you're seeing, you may not see the biggest swings from earnings to earnings. And that's why I always like, in my opinion, one of the main strategies is to look for brand name, financially stable stocks like this and wait for the little dips, and then you step in and you buy the dip and you catch the growth and the rebound over time. Just like I always speak about Philip Morris, something like PM. If a stock like that dips down into the high 80s and breaks that 90 level, which it did recently, and then it went on a tear, right? And it came right back up to the mid-high 90s, and all of a sudden you made a nice quick profit, and now you have a brand name stock that you bought at a nice discounted price, right? So you can either hold, continue to add to the position, or you can take quick profits. Obviously, it's entirely up to you, but I'm sure you understand the gist of what I'm saying. But MetLife here, as we see, down about 1.9%, and we can see, look at that revenue miss, right? This is what I was talking about. 16.05 billion off estimates of 17.72 billion. So they missed by over 1.67 billion, almost 9.5% miss, and basically in line with the EPS coming in slightly light. But again, right there, we may have seen the shift from MetLife over to Allstate. So, yeah, eBay technically incorrect, MetLife incorrect. So we're like 3 for 5 right now. Next one is Upwork. Upwork, I said, in my opinion, I'd probably give them the benefit of the doubt because we saw the revenue growing, and you can see that they recently actually got up above this 180 million mark. You can see going from the 160s up to the high 160s, mid 170s, and then immediately up to around the mid 180s. And we can see this quarter now with estimates coming in about right at mid 180 here, 185.86. The company posts over 190 million and happens to beat that revenue estimate by about 2.7%. On the EPS side, very well as well. And estimates were 18.4 cents per share. The company comes out and posts 22 cents a share, beating that estimate by almost 20%. So Upwork seems to be on the up and up. And again, we know that we had a big shift with our workers, right, working remotely. So even if people had a job that now they're able to work remotely, we know something like an Upwork is a freelance website, similar to Fiverr. So you can go on, you can put in what schedule you're willing to work, what you're able to do for people. And, when you get hired, if you get hired, you can earn yourself a couple of extra bucks in income. So something like Upwork, I can appreciate the fact if you tell me you like it in the longer term and you think it's just going to, continue to like spread and catch on and everyone's going to start jumping on Upwork. I would appreciate, I would understand that. But I did mention calls on Upwork, and we can see we had a really big rally up until, about 4:24, about 40 minutes ago. So we ran for, only maybe like a good, only maybe like a good like 15 minutes, but we did get above 13 here after hours. Now you can see the stock started to pull back here at 12 and a quarter, we'll call it. Not much volume seen after hours. Stock currently up only 2.5%. Again, that was one I mentioned calls on. I guess we'll chalk that up as correct, even though it's not moving too much. Again, like I said, when I say calls or I say puts, I mean, it's more not necessarily of these are going to be the biggest movers and the biggest swings, right? It's more of, you know, how I personally feel about the company overall coming into this earnings report. And, you know, obviously calls would mean that, you know, it would be a favorable report. We're expecting a beat, increased forecast, and the stock should go up, right? Whether it's, you know, 2 or 3% or it's 20%, obviously each stock is different. Carvana, I said in my opinion puts, and of course the company comes out and posts apparently like a record Q1 for the company, and EPS estimates basically in line with what analysts were expecting here with this loss of about 67 cents a share, but the revenue just showing up for Carvana here this quarter. Revenue estimates of a touch below 2.7 billion. Company comes out and posts 3.061 billion, beating those estimates by over 364 million, about 13.5% above analyst expectations. And we can see revenue beats, vehicles sold up 16%, strong guidance moving forward. So Carvana, seemingly one to watch now. Again, I mentioned some trend lines. We had the recent resistance. It did seem kind of inconsistent, and the PE now is high. However, now the EPS is in line and the revenue is really starting to chunk in. So if they can get these losses in line even more, then in my opinion, the stock is going to go up even more. But you know, if we're talking 2 to 3 billion for a quarter here, $17.5 billion market cap. Again, we had that dip ending out 23, but even if we go back up here, we'll call it 13, 14 billion for the year. I mean, you know, we can easily double that up and get to 28, 30 billion, 32 billion, in my opinion, you know, which would be, you know, what, like an 80% move from where we are now, which, you know, again, I mean, we're talking, what, maybe like 150, high 140s? Low 150s conservatively. And now again, I was watching this trend line, right? So this, oh wait, it's off. Damn log. So now, right, we were looking at this one trend line. Again, this now, this higher trend line, this is going from the bottoms of when the company began trading back in 2017, connecting those bottoms there. See those big dips there and those can't, well, actually, I know it's hard to see. Let me try to zoom in for you. Right? So you can see kind of cutting. Actually, it's not really in line. I don't know what happened, but maybe because I was looking on the 1 year. I don't know. My apologies, but basically you get the gist of what I'm saying, right? So this was basically riding along, again, this is not perfect, but it's basically riding along the bottoms of the first year or two of the stock, trying to connect right there, and then I just kind of extended it through, and you can see that that was a recent resistance level that we spoke about earlier that the stock ran into. But now again, you know, this trend line was up here at, we'll call it low 93s. Now the stock's at 117.5 currently after hours, so we have shattered that trend line, and in my opinion, next stop should be probably 124.69 at this fib, getting back to about the mid of this big wide pop and drop range here. And yeah, chances are over time could continue to climb up, and again, kind of to that next zone, as you see, would be like 149, maybe 152. I'm looking right around here, by the way. So you could see high 140s, maybe low 150s. So again, it might take until next quarter as well to see that next leg to the 150s potentially. But right now, in my opinion, I could see Carvana going to the low mid 120s here, coming off of this really good quarter here for Carvana. So if anyone stepped in, obviously that one's a big swinger. It's up 34% right now. So if anyone stepped in and bought those calls, congratulations. I personally said puts, so that one incorrect. Now we're switching over here to Etsy. Etsy, I said in my opinion, I would go with puts in my opinion, and we can see that the stock missing on both the top and bottom line here, but not by much. The company came out on estimates of 48.3 cents a share. They posted 48 even. And we can see revenue estimates of 646.3 million, we'll call it. They came in 645.9 million, missing by literally only a couple of 100,000. So, in my opinion, if you're a longer term Etsy holder, probably not the biggest red flag, right? But of course, we'd like to see our stocks beat at least one estimate, whether it's the top or the bottom line. But Etsy right now taking a big hit, down almost 14% here after hours. Looks like it dipped slightly below 58. And yeah, I mentioned, in my opinion, again, this is kind of like this long-term, not necessarily a descending triangle, but, could make the argument that it's a long-term descending wedge as well. But also at the end of the day, it might just be a descending channel, right? So I know we always like to kind of try to pick our spots with these patterns. But again, as we've looked at on stocks like Safe Bulkers, right? I looked at that the other day. I showed what looked like an ascending triangle in my opinion. And then, earnings came in light and it just added to the momentum and broke out of the pattern and dropped down. So anything could happen. But again, we were climbing and technically got above this top trend line, but now numbers come in slightly light. Boom, we chunked the stock back down into this descending range here. And I did mention that, yeah, if we extend this out, this bottom trend line, yeah, maybe about like 56.5, maybe potentially sub 57. And the stock right now, $60 after hours. And again, hitting that low. What was the low here? 57.89. So Etsy might just kind of hang out for a little bit, and it might require next quarter to potentially pop out of that channel. Profits miss on lower demand. What are we seeing exactly though? Gross merchandise sales profit. Low demand for its big ticket discretionary items. First estimates of 3.12. Yeah, I don't know. See, the problem is I feel like now so many of these types of sites have popped up, right? And now that that's obviously the problem when you're looking for longer term growth, because now they're gonna kind of like chip away and steal, but then and maybe end up giving back in 2 or 3 quarters, depending on the advertising or whatever potential deals or promos they might push on their website. So we know that the market share can kind of like give and take now moving forward from quarter to quarter. And something like this, Etsy, unfortunately, if you play calls, sorry that this one did not work out for you, but apparently demand down a little bit. Slight miss. Etsy currently down almost 14% after hours. Next one up was DoorDash. I said, in my opinion, I would go puts. This one right now seems to be correct. We were looking for a loss of 3.3 cents a share on revenue of 2.45 billion. This points Wall Street downbeat core profit. Wednesday projected second quarter core profit below estimates, signaling that higher costs were offsetting some gains from rising grocery and food orders. So now we have inflation potentially eating away at profits of DoorDash. Forced to increase minimum pay for its delivery workers, right? Yep, they passed that in New York City, Seattle. When I look at the business from Q4 to Q1, costs did go up, okay, said the CFO. Adding that the company passed on some fees to consumers. Sure, why not, right? DoorDash expects adjusted EBITDA between 325 and 425, midpoint of which is below an estimate of about 393. Okay, so that was much more towards the high end of the range. Company said new regulation made its platform, quote, less accessible and less flexible for the people who used to generate income in those cities, and reduce total orders by less than 1% in the quarter. Quote, DoorDash will need to demonstrate growth strategies that can make up for the risk of declining volumes from restaurants in the U.S., as well as pressures from labor expenses. So, and wait a minute. Grocery, retail, and alcohol in a bid to attract more cut. What did I say, right? What did I say? I always say it. These are the defensive sectors, right? We're talking about like the tobacco industry, the alcohol industry, now the gambling sector, right? DraftKings again, still holding steady. I'm telling you, man. You have to play the consumer habits as the economic environment changes, Competition rival Uber Eats, Instacart's total orders rose 21%. DoorDash gained market share in virtually all lines of business across the 30 countries it operates in. Value subsidiaries up 21%. It expects second quarter between 19 and 19.4 billion. Okay. So, in my opinion, it seems like there is overall growth. But again, apparently, costs kind of beginning to eat away at the profits that this company could potentially bring in. And, just broke lower now, sitting down here at 108, currently down about 15.25% right now. DoorDash after hours, that one happened to be called correct as well. I said dash puts. First Solar, I also said puts, and the stock initially jumped up here, as you can see, to about 186.5, and now has pulled back and is down 1.5%. The company happened to come in above both top and bottom line estimates here. EPS estimates of $1.99. The company posts $2.20. Very nice. Beating by about 10%. And on the revenue side as well, revenue estimates of a touch over $718 million. The company posts over $794 million, beating by almost 76%, or about 10.5% as well. Again, we see some light volume here. Stock popped, then dropped. So depending on the full story here, okay, sales increase reaffirms guidance. This full year capital expenditure guidance. Okay, so capital expenditures obviously is what the company will have to spend potentially, and you can see increase that guidance just slightly by about 0.1 billion, or roughly 100 million, and you can see moving it up to that 1.8 to $2 billion range from 1.7 to 1.9 billion. Again, in my opinion, doesn't seem like a big deal, which is probably why, even though now it's down, it's not down that much. Strong demand. Resilient demand for solar energy. Yep. Beating estimates. Solar market has seen significant momentum, helped by regulatory steps. Yes, we know Biden loved solar. Tax credits for panels made in the United States. Module supply in the U.S. remain competitive. Imports from China. Yeah, see, this time last year, this is why I was calling puts, because we saw, a big miss and a big chunk, because it was also in the low of 700 million, and you can see the company, post sub 550 million. That's why I kind of saw that, and I said, oh, they might be struggling now moving forward, so potentially puts. And again, we know that earnings are 100% a gamble. And sometimes they swing randomly on the smallest announcement or the smallest metric that might be getting overlooked. So, it is what it is. You win some, you lose some. But First Solar, apparently, really good quarter there with that revenue coming back in, hitting almost 800 million again. Company maintained 2024 forecast for revenue, volume between 4.4, 4.6. Okay, year-to-date bookings were 2.7 gigawatt. Compared with 48 gigawatt same period last year. Cash at the end of the first quarter decreased to 1.4 billion from 1.6 billion. Capital expenditures. Right. See, now again, this is what I mean. When these companies talk about expanding their network and increasing their manufacturing capacities or building out new facilities, right? Almost like what we saw with Enovix, right? And I'm going to get to Enovix in a second, because I said puts, and the stock last time I looked popped about 20%. Some good news coming out with Enovix. But similar situation, right? In the moment, until the orders come in and the facility is built, you could make a very strong argument that a stock in general, again, not just trying to rip on Enovix, just the stock in general, could be viewed as overvalued and may continue to sell off until facilities, capacities are completed and new orders come in that they can now handle. So that's why you're seeing a nice rebound on a stock like Enovix now, which we're going to get to in a second. But expanding here, Alabama, Louisiana, and Ohio. So this is what I mean. So in the moment, something like First Solar here in the immediate short term may sell off, may stay down, could potentially even just stay flat because of some of these potential slight negatives, right? But overall, with the increased demand and the what do you call it, the tax credits and, expanding the facility. This is what I mean. A situation like this, you have to understand what is happening in the here and now. And if you're planning to be a long-term holder of some of these shares, again, in general, not just First Solar, but in general, if you're going to be a holder of shares long-term in a stock, it's something like this that you have to always update yourself on and keep an eye on. You have to watch these earnings so you can know, okay, we're going to have, a little bit of a dwell, potential little sell-off here. Costs are up a little bit, but in the next 3 to 6 months, this, capacity is going to kick into second gear and, revenues are going to chunk back up to the, 900 millions, potentially billion plus again. So this is why it's, I know they say, you can kind of have like that set it and forget it attitude, but also at the same time, you do have to kind of stay on top of it. And again, if you're the type of person who just wants to buy something and hold it for like 5 years, that's fine. Obviously, in my opinion, if it's a good company and they're growing nicely, then fantastic. But also at the same time, I would say at minimum, you have to kind of update yourself from quarter to quarter on how the company's doing, what they're forecasting, right? Is the demand still there? Are they still looking to see growth? Something like First Solar, are they, building out a facility to increase their manufacturing, right? These are things you got to keep an eye on. But now we're moving on to Enovix Corporation, ticker symbol ENVX, everyone's favorite stock. And this company has made a nice rebound as of late, going from just breaking below $6 recently, getting down to new lows of $5.70, and then kind of immediately regained that $6 value here, as you see. I know it's messy because I got the after hours bars on, but you can see we had this big drop, and then it looks like we potentially found the bottom of the bottom, and then some new volume came in on those dips, and it looked like here, even after running up to almost 7 and then coming back down, you can see it got to about 617, 618, and then started to bounce and rally again. Now, I appreciate also that, the Fed helped out today with that afternoon pump, but you can see this was right at the open here. And you can see the stock was on the up and up for the most part, even before the Fed made the announcement and the market started running. So it looks like we could potentially say that maybe right around $6 is now the low of the low. Because I know I personally mentioned that if these numbers for some reason come in light, or even if they come in line, we could potentially make just the current valuation argument that we could potentially still be overvalued. And again, I know a lot of you guys are pumped and hyped about this stock. You see a lot of long-term growth. And I mentioned as well that in my opinion, I see long-term value as well. I was just pointing out a potential trend line that I was watching just to give you a heads up to say if the stock does pull back. Yeah, I had the log on, but again, just to give you a heads up, saying if the stock does happen to pull back or continue to sell off, we could potentially see new lows down here of about 4.5, which would have just brought the market cap from about 1 billion and change down to about the mid-high $700 million mark. But as we see, the stock apparently had different story. This Route Jade revenue coming in nicely, and the company beating estimates here of only 3.772 million. Again, in my opinion, another low ball estimate here for a company that just acquired another company. But apparently our estimates and previous revenue generated are not currently kind of in sync here with each other. But two back-to-back low estimate quarters in my opinion, but the company is able to pull it out. Again, not bashing the company, relax. But 3.772 million revenue estimates. The company comes out and posts 5.272 million, beating by an even 1.5 million off those estimates, almost 40% above what Wall Street was expecting. And these losses essentially just basically in line with what analysts were expecting, which is good because I know we were talking about the potential bleeding of the stock over the last several quarters. And the EPS has been pretty steadily in line with losses that Wall Street was expecting. So in my opinion now, with the Malaysia facility coming online, and of course apparently they got a deal from a smartphone manufacturer apparently, we can see that now we have new established value in this situation. And if you want to make the argument where, yeah, if markets sell off, we could potentially break and maybe hit something like this fib of 534. But overall in general, with this stock here between like 5.5 and like 8, you're a buyer. In my opinion, I would appreciate that. And I can now understand and agree with that potentially. So enovix right here, blockbuster Q1 sales. But quarterly loss, okay, so beating analysts, large increase of sales 21,000 from same period last year. Stronger revenues, favorable product mix helped company achieve positive non-GAAP gross margin. So the first time in history, off to a strong start in 2024 with Fab 2 scheduled to begin battery production and final X1M batteries ready for sampling in the second quarter. Our customer relationships have grown even stronger as leading OEMs are eager to be the first to market with a high-energy battery cell capable of using 100% active silicon anode, I think, right? Company also announced reached development agreement with one of the top 5 smartphone OEMs in the world by unit volume. Quote, we are thrilled to announce we have achieved our engagement further with one of our top customers by reaching a formal development agreement, underscoring the value and competitive advantage of silicon batteries can produce next generation of smartphones, beginning with X1M. See second quarter revenue between 3 and 4 million, which is now about 1.2 million lower than what they just reported. Adjusted loss of 26 to 32. Non-GAAP loss between 22 and 28. So right now this seems to be good news, right? It doesn't say, yeah, see, providing a potential boost of revenue. But yeah, it doesn't disclose. Expects to deliver its first samples in the second quarter. High volume production would take place at its facility in Malaysia. So this is what we were waiting for, right? This is why the whole time, in my opinion, like I said, you squeezed it up and you forced it to the moon, and now it just inevitably came back down because it was just too overvalued and there was nothing going on, right? Now you have a couple of million coming in from this Routejade acquisition, but now after all of these months that, understandably you may have been very upset, you might be down big. Now, after all of these months, Malaysia now ready to produce, more volume for the company. Now these orders are going to come in, and that's what I mean. Now you have a situation like this where we have a couple of million coming in, we're beating earnings, our losses are in check, boom, we have a nice positive reaction here, 20%, and now also, by the way, we got new orders coming in that we can now handle at our current facilities. Right? That's why I was saying, in my opinion, I wouldn't touch it. I would let it have a rebound. Let them bring in some revenue here, quarter over quarter, a couple of times. Let them establish value. And then as this facility now comes up and running and these orders come in, now, and only now, in my opinion, were we talking about a completely different situation. So enovix right now currently sitting at 796. After hours. I thought again it was going to potentially take another leg lower, and I was incorrect. I know all of you enovix fanboys, so to speak, very excited and pumped about this one, and I am excited for you guys as well, because I know you guys were really looking for that long-term growth, and you were saying that these orders were going to potentially start to come in, and now boom, the news hits, they beat earnings, stock pops 20% for you guys, almost getting back to $8 a share. So very happy for you guys who have been holding for a while, just hoping for some positivity to come out. So congratulations to all you enovix shareholders. Next stock I looked at was Zillow, ticker symbol Z on the NASDAQ. Stock closed a touch below 42, right now down at 38.40, down 3.5 points. 8.33%. I personally called puts on this one, and the company actually comes out and beats on the EPS side, posting 33 cents a share on estimates of about 31, and they beat on the revenue side as well by about 20 million, roughly 4%, posting 529 million off estimates above 508.5 million. Shares drop. Let's see what's going on. Beat the estimate. Sales beat the estimate. 12.79% increase on sales year. Okay. Residential revenue up 9%. Rentals revenue of 97 million increased 31% year over year. Multifamily revenue growing 46% year over year. Okay. Potentially something to keep in mind moving forward. Let's see if these trends continue. Residential, yep. Traffic to Zillow's app sites, 217. flat year over year. Visits were 2.3 billion, up 3% year over year. Quote, Zillow's strong revenue numbers across the business helped us once again meaningfully outperform the residential real estate industry. We continue to expect growth for the housing super app experience. Organically amassed, maintain a large engaged audience, strong brand, investing heavily in software to digitize and integrate the end-to-end moving transaction for consumers, their agents, and their loan officers. Yeah, really, that's it. Or a loss of 23 million in the quarter. Technically, again, we can, if we want to look at it like this, I know they came in above those EPS estimates, but technically $1 million extra loss than where we were a year ago. But again, I don't know if that would be the biggest red flag here. I don't know, maybe investors were expecting more growth on the app, maybe a little bit more attention on the app as well. This is today after hours, right? Yeah. Okay. Okay. Well, yeah, so technically slightly more of a loss by about 1 million, but as you see, right, loss of 23 million, 4% of total revenue, compared with 22 million or 5% of total revenue in this quarter last year. So, yeah, not necessarily a red flag in my opinion. Cash 2.9 up from 2.8. So, yeah, I mean, in my opinion, actually really doesn't potentially look as bad as it might initially be reacting here, in my opinion. Where were we here? We closed at about 10 billion in change. EPS, right? That's fine. That would potentially extrapolate that over 4 quarters. That would bring you back up above 2 billion. Yeah, again, I mean, I don't know. Again, we could have made the argument, like I said, this is a company that, earns a fee off of just listing real estate, but somehow they're not profitable. And, the market cap right now was about like 5x last year's revenue. So, yeah, I don't know. Maybe Wall Street was just expecting more. Maybe Wall Street was just expecting more at the end of the day. And this is why I say again, if you try to find the good strategy to really evaluate the value of these companies, if you can find something like this that you really could have made the argument that it was overvalued, this is what I mean. This is a situation where even if a company beats earnings, you could potentially have a drop down after those earnings come out, just because it can possibly be viewed as overvalued in the numbers. But I have a feeling there's actually more going on with Zillow. But again, I mean, technically I did say puts and the stock is down. So I guess that one's a dub. But Avis Car Group, ticker symbol CAR, there's the last one here. I mentioned puts on this one, and we can see the company misses on the EPS side and beats on the revenue side by about 1.2%, posting 2.55 billion on estimates of 2.52 billion, beating by about 30 million, posting a wider than expected loss, though, estimates of a loss of $2.94. We'll call it the company loses 307 this quarter. So seeing a 5.5% pop right now, stock back up to about 100 even. And let's see here. Yep, we beat estimates. Loss per share. And then, yep, they got the price target technically lowered from 170 to 140, but B of A comes out and maintains its buy and apparently still sees value in Avis. And this was before earnings. But we can see Susquehanna price target to 117 from 145. But overall, I guess we could make the argument again that it was undervalued because I know the company was struggling and I personally called for puts. But, again, we have a situation where, of course, we could dive deeper into the metrics and look at the operating and the profit margins, and we can check how much debt the company has and whatnot. But, again, right now, bringing in over $2.5 billion for the quarter. The company right now only has a market cap of about $3.25 billion, and a PE down here was about 2.25. So we could potentially see if they're able to just kind of turn this one around, because as we see, it's really been on the down and down. We were essentially flat for, we were flat for basically 2 years. Look at that, just kind of bouncing up and down inside of this little channel here, flattening out, and then recently dropping, and even as of late, taking that next leg lower and coming down to those new lows. So if you jumped in avis, I guess technically this is some good news. Yeah, the company was consistently missing on revenue, but beating on EPS, and now they missed on EPS and beat on revenue. So, I guess that is what Wall Street was waiting for. And again, CAR, Avis Budget Group, CAR, I mentioned puts, and obviously that in the moment is incorrect. Stock currently up 5.5% on that slight revenue beat. And that's pretty much it. Those are all the stocks we looked at. So, not a bad result, but again, as we know, earnings, 100% a gamble. Please understand the risks involved if you jump at any of these earnings plays. But hey, if you did jump into any of these earnings plays, and in the moment here, you're up and you got the call correct, brag a little bit down in the comments section. Let us know what you played, how you played it. And yeah, we'll end it there. So once again, stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Have a good day, guys.